Welcome to the channel Get Rich. Today, the company we are going to look into is Exide Industries. So, what is Exide Industries? So, Exide Industries is doing business in battery segment. As you all know, they are the market leader in battery segment. If you look into the market share of Exide Industries in India, it's almost 60% of the total market share in India. The Exide Industries, they're a market leader in most of the segments they are operating in. So they are the leader in automobile, industrial, and other segments like submarine. So if you look into the automobile sector, they are a market leader in four-wheeler, two-wheeler, three-wheeler, and inverter batteries, and they are number two in exports in automobile sector. If you look into the industrial sector, they are the market leader in power, solar, railways, UPS, and different exports and so on. They are number two in telecom sector. If you look into their other segment they are operating in, which is submarine, they are also market leader in submarine. So if you look into their key metrics or how many countries they are operating in, so they are operating in almost 60 plus countries. So they are increasing their export by 7.5% year over year. And if you look into the past 5 years, they increased their exports about 84.5%, but still export remains very small percentage of their business. They are mainly active in domestic market. So they have a dealers network of about 55,000 plus dealer direct and indirect dealers in India. So if you look into the market price of Exide Industries, for example, they're the market leader. They have 60% share in battery market. You might think, okay, this stock is gone crazy over the past few years and currently it might trade at a very rich valuation. But if you look into their share price, they are currently trading at around 170 rupees. But then if you look at the price chart, they are almost 170 rupees at 2011, but still they are trading at 2011. Why is this happening? They're the market leader, but the price chart doesn't fit that way. But if you look into their price chart, they almost hit 300 rupees in, for example, 2018, but currently they are trading at around 170 rupees. So we can see the reason why the share price is not going up even though they are the market leader. So the reason can be found in the income statement. So when we are analyzing their financial statements, we can look into these reasons why their share price are not reflecting their market leadership. Okay, then let's have a look into their business segments. Which segments they are operating in? Which are their key business segments? So if you look into their business segments, they have almost 73% of their revenues are coming from their automotive business. So automobile batteries, which is providing them almost 73%, and then the industrial sector, all other sectors like key industrial projects which they are providing batteries for are key different applications. So they have about 26% of their revenues are coming from their industrial segment, and a submarine sector which is coming about 1% revenue. If you just step out and if you look into their battery market as a whole, okay, always if you are analyzing a company, we need to look into their sector, which sector they are operating in, how this sector is going to evolve for the next 5 to 10 years. So if you look into their battery segment, do they have battery demand for the next 5 to 10 years, or something is going to disrupt their business in the next 5 to 10 years? If you look into that, their main batteries are their automobile batteries, because 73% of their revenue are coming from automobile. So automobile is going to be here for the next 5 to 10 years. It's not going to go away. Also, if you look into their business, it's not only the big OEMs, original equipment manufacturer, OEMs are big like Bajaj or a big OEMs, TVS and so on. They are not only their customers, because they are not only providing batteries for a new vehicle, but they can also get revenue from aftermarket, because the typical battery life comes around 4 to 5 years or even 6 years. After 4 to 5 years they have to replace the battery. So then they can sell their batteries for the aftermarket. So it's a kind of not a recurring business, but it's not sell once and the same customer cannot be their customer again. So they can sell to the same customers once in 4 to 5 years if they can retain their customers. So they have a very good business model. But if you look into their battery as a whole for the next 5 to 10 years, if you look into their the segment, the automobile sector is going to go into a revolution. Most of the petrol and diesel cars will turn into electric vehicles. So electric vehicle is going to be a disruptor in automobile sector. But then, does battery require in electric vehicle? Of course, yes. Electric vehicles requires more battery components than typical petrol and diesel vehicles. But then the main key risk is currently all of the battery manufacturers in India, they used to manufacture lead acid batteries, but for electric vehicle, lithium ion battery is required. So they need to change from lead acid battery to lithium ion battery, depends on the demand when they are coming up. So we can also, that's a risk we can think of. But yeah, we can look into that. Are they doing it currently, or how Exide is doing in lithium ion batteries? So if you look into their revenue mix by geography, so almost 93% of their revenue is coming from India. 7% of their revenue is coming from their international business. And if you look into their institutional and non-institutional mix, almost 25% of their revenue is coming from institutional, and 75% of their revenue is coming from non-institutional in 2021. And if you look into their previous year, it was 30% from institutional and 70% from non-institutional. So almost the retail or after-market business is taking up, and that's becoming their most of their revenues are coming from their aftermarket. And if you look into their products, they sell their products to different applications. So if you look into there, they have presence in two-wheeler, three-wheeler, and four-wheeler, and they have presence in e-rickshaw, home UPS, inverter battery, genset, and they have a product for different applications. They have product for railways, telecom, solar. They have different applications. So we are talking about the automobile business. They are going to have a very bright future for the automobile business for the next 5 to 10 years. But if we also look into the industrial sector, it's also, for example, the renewable energy is also going to be a key play for the next 5 to 10 years, because most of the fossil fuel energy is going to go away, and then they are going to focus more and more on renewable energy systems. So in that case, if you look into the solar, they require more inverters, batteries for solar system. So that is also going to be a key demand for the next 5 to 10 years. So they have automobile business that's also going to boom, and they also have their industrial business that's also going to have very good growth in the upcoming years. But they have to keep up with the growing demand, and also they have to keep up with the evolving technology. And then if you look into their brands, they have different brands. So they have a multi-brand strategy. So they have Exide, they have Chloride, they have Seal, they have Index, they have SF, they have Dynax, and they have Black Panther. These are their different battery brands. And if you look into their different battery applications, as I said, they have battery presence in several applications, or most of the applications. They cover almost all of the applications. So if you look into their institutional clients in the automobile division, they have most of their big companies as their four-wheeler customers. If you look into their four-wheeler customers, they have Yeeker, Isuzu, Kia, Force. They have most of the companies, Tata, Honda, you name it, all of the OEMs they have as their customers. Also three-wheeler customers, two-wheeler customers, you can have like all big companies they have as their customers. If you also look into the industrial division, they also have big names as their customers, and they also have telecom customers like BSNL, Airtel, and also the different traction customers like Godrej and so on. So you can say, okay, they have a different customer base, but currently what are the different new cars? Are they featuring Exide, or are they moving to different battery manufacturers? So the several new four-wheeler models, such as the latest Maruti Suzuki Swift ISG, or Nissan Magnite Petrol, and Tata Motor Safari, they are all equipped with Exide batteries. So they are still keeping. If you look into their manufacturing locations, they have manufacturing locations spread across India. So they have different plants in different parts of the countries. And if you look into their exports, they are increasing their exports, but not so much. They are increasing from 5% in 2017 to 7% in 2021. And if you look into their partners and collaborators, how are they evolving with the technology? So if you look into their partners, they are partnered with Hitachi in Japan, Furukawa in Japan, Eastman USA, and Mora in Brazil. And they have Middam Disruption, which is like Leclange, Switzerland, but they are working in their lithium-ion technology with Leclange. So I will come to that in some time. And if you look into their long-term projects, they are working with ABC for bipolar batteries. So if you look into their next thing, which is lithium-ion batteries, as I said, this is going to be key for the electric vehicle. So they are doing a joint venture company with Leclange, so Exide Leclange Energy Private Limited. So this is called Nexcharge. So they have their production facility is spread across almost 6 lakh square feet of land, and they have 100,000 square feet, which is located in Gujarat. So they have the state-of-the-art factory, which is equipped with fully automated assembly lines for battery packs. So they can do cell testing, or they can do all packaging there. So it's not a cell manufacturing facility, but it's a assembling facility for batteries. So they are importing their cell from their vendors from outside India, and then they're going to assemble it in their factory, and they're going to sell it. So yeah, this is a good starting point. Yeah, setting up a cell manufacturing facility will cost them a huge R&D spend, and also a huge capex they have to put in to put a big factory. And the demand is not at that. That's the main thing. So currently, if you look at the current situation in India, we don't have much demand for lithium ion battery, because electric vehicles is not at there. It is going to come, but we don't know when. So that's the main thing. So the timing is very important, because now if they invest huge and there is no demand, then they have to pay to the interest and so on. The return on capital is not good, but the timing is also important. So they have about, for example, 80.15% stake holding in this Nexcharge, and they invested about 192 crores in these facilities. They have 50 plus engineers, and the plant capacity is 1.5 gigawatt hour. And if you look into their projects, or if you look into their orders which they are getting from this facility, for example, they got a large order of 3,000 battery packs for electric three-wheelers from a renowned manufacturer, renowned who. And they have multiple pilot orders from startups in e-scooter and e-rickshaw space. That's also a good thing. They are also getting pilot orders for the two-wheeler electric two-wheelers, and they have long-term agreement with multiple OEMs. And if you look into their UPS, so they are also doing several proto testing with a major telecom chain. So they own a contract about 75 crores that has been signed for this segment. And if you look into their different collaboration with Nextchart, they have collaborated with Tata Power, and they installed the country's first grid connected lithium ion based community energy storage. So this can provide, for example, different load shifting capabilities with these batteries. So they can do peak shaving with these kind of batteries. So this is also a project they are doing with Tata Power. And if you look into their different products which are in trial, they are working on micro hybrid car batteries, bipolar lead acid technology, battery based energy storage system. These are the products they have in trial. And if you also look into their other business, which is a service business they are starting. So Exide Batmobile, they have a doorstep service in their industry. They launched it in 2000, and they are evolving, and then they are scaling up. So they have about 2,44,762 requests in financial 2021. So this is mainly, for example, if your car break down in middle of nowhere, you can call their service, and service assistants will come. One person will come and check the battery, and if you want to replace the battery, then they will replace the battery. So that's the thing they are doing as a service. They are covering almost 85 cities in India. The roadside assistants, they are covering for almost 85 cities. So then if you look into their Exide insurance business, they not only have their battery business, they also have a insurance business as a subsidiary. Currently, you might have heard the news, they sold their insurance business to HDFC Life Insurance. So if you look into their valuation, so previously the Motilal Oswal and Geojit, they valued their insurance business about 25 rupees per share. Motilal Oswal valued, and Geojet they valued 29 rupees per share for their insurance business. If you look into their total number of equity shares in Exide Industries, they have about 85 crores total number of equity shares. And if we just use 25 rupees per share and 29 rupees per share, the valuation they measured, which is 2125 crores to 2465 crores. So somewhere these are their valuation estimate by the different analysts. But if you look into their valuation, they sold it, so they divested with about 2.5 times the embedded value, which is almost 6,687 crores. So they sold their insurance business for 6,687 crores, and they will get 730 crores in cash, and they will get 5,960 crores in HDFC Life stock. So they almost sold 3 times the valuation the analyst estimated. So that's huge. So now Exide holds about 4.1% in HDFC Life, and also they are going to get 730 crores in cash. But so they are divesting this insurance business to focus on their core business, which is their battery business. So now they have got huge money to invest. For example, if they want to invest in their lithium-ion manufacturing plant, or if they want to do some research or whatever, so they have got cash. They don't have to leverage their balance sheet to invest in a big factory manufacturing plant. This is very good. So they can invest in lithium-ion manufacturing plants if they see the demand. So that's a very good news. So but then we also have to look into what will be the impact of this business in the income statement and balance sheet and so on. So we'll have a look at it in some time. So then if you look at their capex they are spending, so usually they are spending around 468 crores and 763, 679, 484, and currently 349 crores. And if you look into their R&D spend, which is about 20 to 30 crores. If you are looking into their return on capital employed, which is about 15 to 20% they are getting. If you look into the different risk of this company, so as I mentioned, the key risk is the disruption by lithium-ion technology. They have to invest in lithium-ion battery manufacturing, plus they have to evolve the technology for the coming future. And then they have for example the raw material risk, for example. So they have they are mainly manufacturing lead acid batteries, so their key raw material is lead. The lead prices is increasing, so that's going to affect their cost, and that's going to affect their margins. But then if you look into their Exide Industries, they acquired two captive lead smelters, which is in Pune and Bangalore, to meet majority of their lead requirements locally. So in that case they can mitigate some of these costs, so they can mitigate these risks. So raw material risk they can mitigate by these two lead smelters which are acquired. So that's a good thing. This is addressed, and they are also working with Nexcharge Energy with lithium-ion batteries. So if they can invest in, they have got money to invest in lithium-ion manufacturing plants, so they can if they see the demand, and if they have the technology, and they can easily invest in big huge gigafactories to manufacture lithium-ion batteries. So that's not a big risk. Let's have a look at the financial statements to see why this stock haven't performed for the last 10 years. So if you look into their financial results, their sales they are increasing by their sales in 7.3%, and they are increasing their operating profit by 5.8%. They are increasing their net profit by only 2.2% for the past 5 years. So if you look that, so usually the stock price reflects the net profit they are generating. The net profit CAGR, which is just 2.2%, then the stock price will also somewhere 2.2%. So that's why the stock is underperforming, because their net profit is not growing to the level of their sales. So which means their margins are decreasing. So we have to look at their operating margin, why this is decreasing over time. If you look into their dividend yield, they are also increasing. Earning per share, that's also that's same as net profit, so it's 2.2%. And if you look at the book value, it is also increasing by 8.6%. So let's have a look at their consolidated income statement. So if you look at their sales in 2011, so their sales is 4,726 crores. And if you look at their sales in March 2021, it's 15,297 crores. They tripled their sales. That's good. If you look at the net profit, their net profit in 2011 is 619 crores. If you look at the net profit in 2021, it's 810 crores. It's not much change. They're not even 50%. So the key thing is the operating margin. If you look at the operating margin, it's 20% in 2011. Currently it's cut by half, only 10%. So the operating margin is keep on decreasing. So that's the reason the stock haven't performed much. So if you look into the sales growth, compounded sales growth over 5, 10, 3 years, it's 6, 10, and 12%. But if you look into the profit growth, it's only 3, 4%. So that's not much profit growth. That's why this company haven't performed. But the past performance doesn't have to be the same in the future performance. So let's see how this company can perform in the future. Is the operating margin is going to be keep decreasing in the future years, or there is going to be any change? So if you look into the operating margin, so it's 20% in 2011, and then 14%, 11%, 10%, 13%, 12%, 11%, 10%. So it's keep on changing. Also now we have to look into the insurance business they sold. So what will be the impact of the insurance business in the income statement? So for that we have to look into different subsidiaries they have. So we can also look into the standalone income statement, but then for that we have to make sure their other subsidiaries are not that influencing to decide based on the standalone income statement. So let's have a look at their different subsidiaries. What are the different subsidiaries they have, and what will the impact their subsidiaries make on their income statement? So let's have a look at their subsidiaries. So they have different companies, their subsidiaries. They have Chloride International Limited, and they have Associated Energy Manufacturing, and then they have different, like Exide Life Insurance Company Limited, they Exide Technology Energy Private Limited. They have different subsidiaries. And for example, I already went through the different income statements of all of these subsidiaries. So their biggest one, or the key one we have to look into, is Associated Battery Manufacturers Limited, which is they have the shareholding of 61.5%, and then Exide Technology, which is 80.15%, and most of the others are 100%, and then three associates which are 27%. So if you look into their associate companies, so the first company is their associate company, Solar Private Limited, and they have a loss of about 2 crores. So that's not much compared to their actual net profit. So if you look into their CSE Solar Sun Prague Maharashtra Private Limited, they have about loss of about I think 36 lakhs. And if you look into their CSE Solar Sun Prague Tamil Nadu Private Limited, they also have a small loss. It's also negligible. So if you look into their Associated Battery Manufacturer Limited, so it's in Sri Lankan rupees. So it's almost 6 crore rupees in Indian rupees, which is they are going to lose from this company, and they hold about 60%. So it's roughly about 4 crores they are going to lose from this company. And if you look into other subsidiaries, which is Exide Technology Energy Private Limited, they are going to lose about 18 crores in this company. So if you look at the 80% share, so it comes about 15 crores, 16 crores loss from this company. And this is in small profit, so it's also negligible. And if you look into this company, this is also negligible. So this one has for example, this is in dollars, so it means it's about 7 crores of loss this company is going to generate. And then we have this company, which is also going to generate minimum profit. And then other company, this is also not much. And the last one, which is the Chloride Metals Limited, this is going to generate about for example 14 crores. So this company is generating 14 crores, the other company is going to lose 16 crores, and it's balanced it out. So their other subsidiaries influence in their consolidated statement is going to be very negligible. So the main business is the insurance business. Now the life insurance business is sold out, and all of the other subsidiaries has negligible influence in the consolidated income statements. So in that case, we can directly look at the standalone income statement to see how the future is going to be, because all other subsidiaries are now negligible. So let's have a look at the standalone income statement. So the standalone income statement. So in 2011, their sales was about 4,500 crores standalone, and for their key business, which is battery business. In March 2021, their sales was about 10,000 crores, and if you look at their net profit, it was 666 crores in 2011, and currently it's 758 crores. So that's also not much, even in their key business. The reason being the reduction in operating margin. The operating margin was 20% in 2011, and then now currently it's sitting at around 14%. But this is not bad, because if you look into their consolidated income statement, in March 2021 their operating margin was 10%, and currently if you look at their standalone income statement, their operating margin was 14% in their key business. And if you look at their operating margin of the standalone business, so if you just leave out 2011, which they have progressing to 20%, and from 2012 their operating margin is more or less remain steady. So it's 14%, 13%, 14%, 13%, 15%, 14%, 14%, 13%, 14%, 14%. It's their operating margin is steady after 2011. So there it's, according to me, it's good. Their operating margin is steady at 14%, so I expect their standalone business is going to generate about 14 to 15% operating margin for the next 5-10 years. So in that case, now if their sales, if they are growing at 8 to 10%, they can also grow their net profit at 8 to 10%, because their operating margin is not reducing anymore. So in that case, in the future, yeah, their sales growth can reflect their net profit growth. So if you look into the analyst expectations of the profit after tax growth for the next few years, in financial 2021 they are making about 758 crores as a profit after tax or net profit. In 2022, analyst is expecting 866 crores, which is 14.3% growth, and 2023 analyst is expecting 1114 crores as net profit, which is 28.6% growth. So they are going to have a huge growth in the next 2 years, because of the very low effect in 2021. So they are going to grow pretty good in 2022 and 2023, and then they can keep up with the growth of the sales growth. So that's my expectation as well. So if you look into their free cash flow, what is their free cash flow? So they are doing about for example 950 crores in 2016, and then they have about for example 2019 it's 560 crores, and then 450 crores in 2020, and 2021 they have about 1000 crores, and 2022 they are expected to do about 1380 crores, and then in 2023 they are about to do about 1000 crores. That's the expectation, though they are almost going to do about 1000 crores of free cash flow. That's pretty good, I would say. And then if you look into the shareholding pattern, so their promoter holding is almost steady, so they are not decreasing. But then if you look at the mutual fund holding, they are reducing their stats by huge. Their holding is reduced from about 18% to almost 10%, and also FII is also reduced the stake recently. They are increasing their stake in March 2021 and June 2021, and then they reduced in September 2021. That's not a good news. Yeah, but promoter holding is steady. And if you look into the different funds which are holding this company, so which is HDFC Mid Cap Opportunities Fund, they are holding, and the ICC Prudential Value Discovery Fund they are holding, and they did not increase the share or decrease the share. And few mutual fund houses like Kotak, ICC Prudential Equity Arbitrage, as well as they increased by 8 to 10%. That's the mutual fund holdings of this company. And if you look at the valuation of the company, so they usually trading between 15 and 30, so that's the range they were trading about. The PE, the average is 22.1. The currently they are trading at around 17 to 18 PE, which is, yeah, pretty less if you compare their growth and the market opportunity. And yeah, we have to also talk about the risk. I will talk about in few minutes. And if you look at the price to book ratio, which is also trading somewhere between 2 and 4.4, currently it's also trading in the range of 2.2, 2.3. That's also historically low when we compare yeah, historic prices. And then if you look at the revenue projections for the next 3 years, so in March 2021 it was 10,000 crores, and 2022 they are expected to do about 11,500 crores, which is 14.7% growth in 2022. That's because of very less growth in 2021. If you look into 2023, I am expecting the growth to reach 12% for 2023, and 8% for 2024, and 8% for 2025. If you look at the net income growth, I am expecting it to grow about 14.78% in 2022, and 26.4% in 2023, and 8% in 2024, and 8% in 2025. So the net income is about to grow to 1,280 crores in 2025. And if you look at the price target with the current valuation, which is 18, that is pretty low for a company like this for personally. But if we make a price assumption, price target based on the current valuation, it's going to be 271 rupees for the next 3 years, which is a 60% cumulative growth. That is very, very conservative. So the conservative price target for me, which is the average PE, which is 22. So if we calculate with the PE of 22, then the 1 year price target would be 285 rupees, 2 years price target is 307 rupees, and 3 year price target is 331 rupees. Based on the current price of 170, so it's going to do about 100% cumulative growth for the next 3 years. So the conservative price target is 100% for the next 3 years. That would be 26% CAGR for the next 3 years. That's pretty good. With limited risk, because if you talk about risk for this company, so the key risk was, for example, raw material risk. They mitigated by the lead smelters they acquired, and they have other like uh, big risks. For example, is lithium-ion technology, which is going to take over lead acid batteries. Maybe we can still have lead acid batteries demand, but lithium-ion technology can take over in 5 years, or it's not going to be immediate, but it can disrupt in next 5 years or 10 years, because electric vehicle is going to boom for the coming years. So they already have lithium ion assembly lines, and they are also already getting customers, and they have got money to put in gigafactories for cell manufacturing or lithium ion technology, because they just sold their insurance business. They have huge cash. If they want to invest in their lithium ion technology, they can do that. So according to me, the risk to reward ratio is pretty good, because they are the market leader, 60% market share. It's pretty good one. So it's for example, yeah, for me it's a risk to reward ratio is good. It's a safe play to get 100% for the next 3 years. You can double your money in 3 years in this stock, personally I would say. So the disclaimer is, yeah, I own this stock, so that's the disclaimer. And this is not a financial advice, this is my personal opinion. And yeah, this is one of the safest play we can have with the huge returns in the current market. It's very difficult to find a stock with attractive valuation, because most of the companies are trading rich. So this company is it's a no-brainer, I would say. So that's my personal opinion. You can have different contradicting thoughts. So yeah, that's all for today. Thank you for watching, and if you like this video, like, share, and comment your opinions or views on this. You can have contradicting thoughts, that's no problem. And yeah, please subscribe to this channel. And also, if you want to have free newsletters, please subscribe to the free newsletter, which is also available in the link in the description. You can subscribe to the free newsletters you can get from the channel. And that's all for today, and thank you for watching, and have a nice day. Bye.